Good afternoon and welcome to Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Jared Dillian. He is the author and founder of the Daily Dirtnap. Jared, thank you very much for joining me.
Thanks, Jill.
Again on set, and we have a lot to cover today now that we have you up in New York, but you're also the editor for a feature in maudlin economics called The 10th Man. Tell us about that and where did you get the name from?
The 10th Man is a free letter. It comes out on Thursday every week. And I got the idea watching World War Z, you know, with Brad Pitt, the zombie movie. And there's a segment in the movie where Israel has actually been immune to the zombie attacks. And it sort of talks about the background of why that is. But they had a 10th man system. Out of every 10 people, there was one person who questioned the status quo. And that's how they came up with the idea to build the walls around Israel. But I'm supposed to, as the 10th man, I'm the person who has to disagree with everything. That's my job.
Right, so you're almost like a contrarian writer when it comes to Wall Street. So in your piece last Thursday, and I read The 10th Man religiously, you focus on the deficit in spending and how it could potentially impact the market. And you brought up a great point. You said that everyone was freaking out when the national debt was 60% of GDP, but now that it's at 105%, you're really not hearing that noise anymore. So my question is, what's the backstory to that, and should we care as market participants when we talk about deficit and spending?
Yeah, we should care a lot right now. And the odd thing is that people don't really care. If you go back to the late 80s and early 90s when there was a lot of freaking out about the deficit, the Reagan-Bush years, you know, the deficit to GDP ratio was about 4, 5, 6%, and debt to GDP was around 60%. And these were manageable levels. Like, it was easy to sell bonds into the market. And what we're seeing now is that with trillion-dollar deficits, there is strain in the bond markets, and supply is having an effect really for the first time in 22 years. And if you project out into the future, there's, you know, we have trillion-dollar deficits out until the next electoral cycle. So, you know, that's a lot of strain on the bond market, and interest rates are probably going to go higher over time.
All right, let's talk about the Daily Dirtnap, another great read. What firm did you used to trade for, and how does that lend to the name, the Daily Dirtnap?
So I started my career on the P-Coast Options Exchange back in the 90s, and you know, I was just a clerk. I was getting sandwiches and stuff, and I worked for a firm called BOTA, B-O-T-T-A, which stood for Best Options Traders There Are. And they were they lasted until about 2002, so clearly they weren't the best options traders. But there were some good people there. And on the P-Coast Exchange, it was in San Francisco, and market hours were, you know, you were out of there at 1, so people would go surfing. So you had a lot of surfers that were traders, and they had their own lexicon. And Dirtnap is what they would say whenever the market went down. So really it came from San Francisco in the late 90s during the tech bubble.
All right, but you also traded at Lehman. What was that like?
Yes, Lehman was, you know, Lehman was just an incredible experience, and a lot of the people it was the most entrepreneurial place imaginable. If you had an idea of something to make money, you didn't have to ask permission. You could just do it. And if it didn't work out, you were not going to get fired. You were encouraged to take more risk. And there was no hierarchy, and things moved fast. And the people I worked with at Lehman have spread out all over the street, and they're in positions of responsibility. And it was the best place imaginable to work. It was very hard.
Right.
It was hard work.
All right. Well, you know, you talk about a lot. What's a bad trader? What constitutes a bad trader? Probably,
I would say 2 things that would make you bad at your job. One is overconfidence. You know, trading requires a bit of humility, and you have to understand that there is a possibility that you are wrong, you know, and I think overconfidence gets people in trouble. And also, I would say people who have a lack of introspection, people who don't really think about themselves and their strengths and their weaknesses and where their weak points are. So I would say those 2 things, overconfidence and a lack of introspection.
Right, well, we saw the overconfidence blow up in the beginning of February with the short vol trade, right? And that's something that I know you've been speaking to for years at this point. Does this market feel like it did when it was Lehman and it was Bear and there was overconfidence and complacency and products out there that perhaps should not have been? Could this potentially be the beginning of another Lehman Bear cycle?
Well, no, I don't think so. It's very different. you know, what we had in the financial crisis was a debt problem, and what we have right now, it's not debt, it's not fixed income. You have a lot of short volatility, short convexity that has been pumped into the system through, you know, explicit strategies like inverse vol ETFs and vol targeting strategies and put selling and stuff like that. There's just a lot, you know, we could have a volatility crisis, but it's actually, there's really not much of a transmission mechanism to the real economy. So I think it could be more, if this vol crisis gets worse, I think it could be bad for markets, but not necessarily bad for the economy.
Right, well, there's a big distinction there. Well, it's like what you said on Twitter a couple of weeks ago. Is this an overextended bull market or a prolonged bear vol market?
Right.
Right? And
Yeah.
you have your answer right there. Well, thank you very much for joining me
Thanks.
for Trade Talks. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.